Hello, everyone, and welcome to our webinar, How to Finance Your ADU. This is geared towards homeowners in Napa and Sonoma counties. And I can see a lot of folks coming on into the Zoom. So I'm going to give everyone just a minute to join us. Hi there, Luis. Thanks for chiming in and saying hi. Welcome to everyone. Hola y bienvenido a nuestro seminario de web, Cómo financiar su ADU. This event is being simultaneously translated into Spanish. Este evento está siendo transmitido en vivo en español. To access that feature, click on the interpretation button at the bottom of your screen. Para acceder a este servicio, favor de oprimir el botón abajo de su pantalla y seleccionar el botón para español. We thank Gabriel Gutierrez, who is offering our audience live Spanish interpretation. Le damos las gracias a Gabriel Gutierrez, quien nos brinda la interpretación al español esta tarde. I will let Gabriel take the interpretation from here. Before we get going, a couple other Zoom logistics for all of you as I see you continuing to join us this evening. We invite the audience to submit a question through the Q&A function, also available at the bottom of your screen. Questions, for the most part, are going to be tackled during a live audience Q&A session with all of our panelists at the end of our 90 minutes together. And in addition, we're going to be inviting you to answer various polls that we'll be launching over the course of the webinar. So get ready to interact with us throughout the next 90 minutes. So that you know, this webinar is being recorded and it's going to be made available on demand on our website by next week. So I'm just going to let a couple more folks join us as I see people coming in, and then we're going to get going. All right, so hi everyone, my name is Renee Champ and I'm the director of the Napa Sonoma ADU Center. I'm a lawyer by education and a nonprofit leader by trade. I'm a native of Sonoma County and I'm the first director of the new Napa Sonoma ADU Center. I live in an above garage ADU myself, and I believe in a future where every person in Napa and Sonoma counties can afford to live and thrive here. I'm joined this evening by many wonderful folks who I'll be introducing to you by turn throughout the evening. And I do first want to say a special thanks to Amity, our admin support superwoman, who's taking care of all the behind the scenes Zoom logistics for us. And to that end, I'll note that Amity is going to be chatting into the chat bar for all of you a lot of links to a bunch of different tools and resources on our website to make it easy for you to access those this evening. So if you want to save those links, first of all, they're all on our website and easy to access and navigate. But if you end up wanting to save those, you can copy and paste them for yourself to look at for future reference. With that, let's talk about our agenda for the evening briefly. I'm going to tell you a little bit about our nonprofit, the Napa Sonoma ADU Center. And then we're going to have our panelist, Caleb, join us to provide you with an overview of the main ways to finance an ADU, including the pros and cons of each. And then I'm going to introduce a series of panelists, and you're going to hear from local institutions, lenders, in this community who can help you finance your ADU. And then at the end, you're going to have a chance to ask every one of our panelists questions along the way. All right, so with that, I want to hear a little bit from all of you about your ADU goals. So if you could answer this poll as it comes up, what are your goals in building an ADU? And you can answer any of as many of these questions as you'd like. So go ahead, take a minute, and I'll give you a second to read through all of them. Okay. Thank you all. So it looks like 63% of you are interested in rental income, over 50 in housing for a family member, 26% in helping out the community, 50% planning for retirement, 25 increased resale value of your home, and some folks interested in having folks who are around the property to help with chores and stuff like that. Thank you so much for your time filling out that poll. It really helps us get a sense of what folks are thinking as they join us this evening. And with that, let me just share a little bit about the benefits of ADUs. In fact, I'd love for you to check out, and Amity is going to paste for you coming up here, a link to our ADU workbook on our website where you can get some information about the flexibility that an ADU can offer you and all of the different benefits that an ADU has to offer, which if you're here, I have a feeling you have a thought on that already. Okay, let me tell you a little bit about our organization, the Napa Sonoma ADU Center as well. The mission of the Napa Sonoma ADU Center is to help homeowners build ADUs. Napa Sonoma ADU is a fiscally sponsored project of Napa Valley Community Foundation with support from Community Foundation Sonoma County and others. And we just formally launched with my hire this past spring. ADUs have been increasing in popularity across Napa and Sonoma counties for some time. And one of those reasons is thanks to new state laws that went into effect in 2017 and then again in 2020. So as you can see, the numbers have been rising and our organization is here to help homeowners continue that trend. So a little bit about resources and tools that our organization has to offer. We have a lot of tools and resources that are really user-friendly and designed to help you along your ADU journey. And I'm going to share about those here in 1 second. But first, take a moment, just check this out. And if you have questions later on, we'll be able to answer those. All righty. So a little bit more about the support that we can offer to homeowners. So we offer support to folks. You can contact us anytime with your questions about ADUs, and we're here to help. You can just go to our webpage at www.napasonoma.edu and click on the Contact Us button, or you can give us a call anytime. And then I also want to make sure that you all have access to certain resources that we have available on our website. So Amity is pasting those into the chat there for you. So we have a lot of different resources, and sometimes folks miss out on some of our webinars like this one. So I'm pasting here some recorded webinars that we have that are on demand that can give you some ADU 101 information. So a little bit of information also about our Facebook support groups. And I'm going to just check in with Amity about our slides here. Great, thanks, Amity. So our Facebook support groups for homeowners, we have just launched these support groups, and the goal is to help folks find some peer-to-peer support on their ADU questions as they come up throughout the ADU journey. So we've launched our pilot support groups for homeowners in the cities of Santa Rosa and Napa, and you can go ahead and join those. Amity just pasted them into the chat for you. If you're a homeowner in Napa or Sonoma, please feel free to join us there. And then another thing that we offer to folks is ADU feasibility consultations. So there's detailed FAQs available on our website about these consultations, but in short, it's a 4-step process. You complete a quick questionnaire, then we do pre-screening on your parcel. We do a site visit with you, and then we end up sending you about a 25-page customized ADU feasibility report that walks you through your next steps on your ADU project, cost drivers for your ADU, a recap of your goals in building an ADU and our specific recommendations given your goals, and then information about the professional team that we recommend that you hire. Okay. So we want to hear a little bit more from all of you. So we're going to pull up another poll here for you. And we'd love to hear a little bit about what are your concerns in building an ADU? So go ahead and you can pick as many of those options as you want. And I'll let you take a moment to read through them. So a lot of folks have concerns about cost, permit approval. So don't hold back. Feel free to fill out as many are relevant to you. And we'll give you a couple more minutes to read through those. And we have over 60 folks with us answering this survey this evening. So I'm seeing 82% are concerned about cost. Glad you're here with us this evening. 67% are concerned about the difficulty of permit approval. 36% difficulty of construction management. About 50% are worried about site constraints, and almost 50% are worried about scrutiny from the planning and permitting department. These are really common concerns. I'm so glad that you guys are all here to talk to us about financing your ADU. And if you go to our website, you'll see a bunch of other resources that are specific to the cities and unincorporated counties across Napa and Sonoma, where you can get a lot of information that I think will allay your concerns about the difficulty of the permit approval and scrutiny from the planning and permitting departments, and also help with construction and how that goes as well. So you've come to the right place. Thank you all so much again. With that, I want to go ahead and introduce you to Caleb Smith. So Caleb, feel free to bring up your video and unmute yourself. Caleb is the chair of the ADU Finance Committee for the statewide Casita Coalition. And he's going to kickstart our conversation with a 15-minute overview of the primary ADU finance options that are out there, including the pros and cons of each. This is a really amazing set of information he's going to share with you. So with that, I'm going to turn it over to you, Caleb, with a huge thank you to you for joining us this evening.
Thank you, Renee. It's my pleasure to be here with you all this evening. And I'm very glad to be talking with you all about ADU finance. It's something I regularly have the opportunity to talk to folks across California about. I'm presenting tonight in my individual capacity as opposed to on behalf of the Casita Coalition, but a lot of this information is going to hopefully be useful to y'all. So if we could please start with the next slide. Before we get into a discussion about some of the most common ways that homeowners finance their accessory dwelling units, we wanted to highlight a really great resource that's customized for homeowners in Napa and Sonoma County, which is the ADU calculator, where you can put in some information about your project, the type of project it is, how big it is, and a little more information. And then you can see what might you get in terms of rent, or what are going to be some of the cost factors. So it's a very useful tool to try to ballpark the amount of money that your ADU might cost, though all projects will be different from each other. So in the next slide, we can see that there are four main categories or bins of accessory dwelling unit finance strategies. The ones that are bolded are the ones that we're going to be focusing on tonight. But the four categories are existing assets. If you already have the money, we're not going to talk about that very much. We would be watching the Warriors game instead tonight. The other three categories, first off, are those that rely mostly on your existing home equity. Income is going to be a factor, but strategies like a mortgage refinance, a second mortgage, a home equity line of credit really tap into that existing home equity that you've built up. Alternatively, there are strategies like a renovation loan or construction loan that rely more on your income. Home equity is more of a secondary factor. And there are some experimental products that we'll briefly mention later on. Now, before we get into the details, I wanted to mention three key terms that are useful in any ADU financing discussion. Those terms being the debt to income ratio, your credit score, and your home equity or loan to value. Your debt to income ratio is all of your debts divided by your income. Your debts include your car payments, student loans, other outstanding debts, existing mortgage debts, and your income is your wages, salaries, alimony, other income. That's something that banks are going to look at to see whether you're able to repay a loan. Your credit score, your FICO credit score, is very important in ADU loan financing. As many of you may already have a mortgage on your existing property, so you're probably familiar with this, but there may be some products that require a minimum credit score to qualify. And even when you do qualify, a better credit score can help get you better terms. And your loan to value is the ratio between all of your outstanding loans on a property and the amount of home equity that you've built up. So if you have an $800,000 mortgage on $1 million home, your loan to value ratio is 80%. So let's talk briefly about first of the categories, the options with existing home equity. Now, in the first slide here, we see that what the first option is to refinance your existing first mortgage to get a new mortgage replacing your existing mortgage. These offer very attractive rates, sometimes the best interest rates available. If you already have an older mortgage with a higher interest rate, then you could potentially save money on that by refinancing to a lower rate now. And you can lock in your rate through a fixed rate mortgage product. This can be a less good idea if you're concerned that your existing mortgage is already really great. Maybe you already have a low rate locked in. There's also potentially more paperwork involved with this option than in some of the alternatives. And all of your money comes together in one big lump, as it were. So you have to know upfront how much your project's going to cost. The second option is similar but a little bit different, which is a second mortgage on top of your existing first mortgage. This can be a good alternative to a refinance if your existing first mortgage has a lower interest rate than the ones that are available now, though we do have very low interest rates these days. The fees for a second mortgage can be lower than when you refinance your first mortgage. And once again, it can be helpful to lock in your rate. Though on the flip side, there is, once again, the possibility of the interest rate being high for your existing mortgage. You might want to get out of that. And once again, all your money comes together at one time. The third option is more flexible. This is a home equity line of credit, or HELOC, as a lot of people like to call it. This one, instead of having your loan come all at one time, it's a bit more spread out. You tap it on your own schedule, a little bit like a credit card. The advantage is that in some of these products, you don't have to start repaying the loan principal until later on, because typically these are structured where there is a borrowing period of maybe up to 10 years where you can access your home equity up to a certain limit and borrow from it. And then there's a repayment period later on when you pay back on a regular monthly payment. Some of these products are interest early during the first period, so that can save you money in terms of your monthly payments. And also this is more flexible. You typically don't need to borrow more money out of your line of credit than you actually end up needing. And you don't have to start paying interest on money until you actually borrow it. The disadvantage is that these often have variable interest rates. So if interest rates do go up in future, you may not be able to keep the low rates we have today. And also, it's important to be focused on your project with this because this is such a flexible product, you can easily spend the money on something else. Shifting gears a little bit, let's look at a couple of options with your existing income. The first option is a construction loan, which is a loan based on the future value of your home plus your ADU. This can be helpful if maybe you don't have a huge amount of equity in your home right now, but you have an ADU project that will add value to your home. So you can take that into account when you're applying for a loan product. Another advantage here is that the bank will typically not release the money for you to pay your contractor unless the work is actually completed. Most contractors are legitimate, they get the work done on time, There's no hassles, but this can be an added safeguard. The disadvantage is that the options we were earlier talking about, refinance, a second mortgage, or a home equity line of credit, might have lower interest rates than a construction loan. And a construction loan, unlike the options we were talking about before, which will often span for more than 10 years, a construction loan is often very short term, sometimes 12 to 18 months before you refinance it into a different type of loan, like the ones we were talking about earlier. Construction loans are also not always the best fit for certain types of ADU projects. If your ADU is not going to add a lot of value to your house, such as maybe converting an existing space, this may not be as good a fit because you may not be able to add too much to your home value. Now, a renovation loan is similar. This is a mortgage that includes money for repairs or upgrades to your property. These loans are two most prominent ones are two loans that are indirectly supported by the federal government. The first one is a 203K loan from the Federal Housing Administration. The second loan is called a home style loan that's offered by Fannie Mae. In both of these cases, the people who will actually give you these loans will be a bank or a mortgage broker, not directly the federal government. However, these are two special loan programs. The advantages is that some of these have very high loan to value ratios. So once again, if you don't have a lot of home equity, this can be a good option. Also, in some cases, if you're trying to buy some property and build an accessory dwelling unit, then at least in theory, you can do that with one loan instead of having to try to do it through multiple loans. The disadvantage is that these renovation loans may have higher interest rates than some of the home equity options we were talking about before. Also, their usefulness is somewhat limited in Napa and Sonoma County because there's a loan cap on the maximum amount you can borrow. Across the entire country, that's up to $822,375 for a single family house. It's a little bit lower in Napa and Sonoma counties. Also, because this is a type of construction loan, you still have a time limit that you have to take into account. Because this is a type of construction loan, there also can be a little bit more paperwork and documentation because once again, you need to show that the money is being spent on the construction. Last category, which we're only going to talk about briefly, is about experimental ADU products. And these are new approaches that are not yet common in Napa and Sonoma counties, but we wanted to mention them because it's possible that you might stumble across them in your online research, or you might be contacted by one of these companies. The two most prominent of these is something called a ground lease or something called shared equity. A ground lease is best described as the ADU builder rents your backyard, they build an ADU there, they rent it out, you get a part of the income. Well, shared equity is a little bit like a loan, but it's legally different, and it's really a bet on how much your house is going to be worth down the road. The more it's worth, the more you pay back. In some cases, these can be fits for homeowners who cannot access other ADU finance strategies. On the other hand, they're unregulated, and they can have catches or limitations that other products are more flexible around. So those are some of the key options there. All of this information, plus a few less prominent, more minor ADU finance strategies that we didn't have time for tonight, are going to be included together in a forthcoming guide to ADU finance that the Casita Coalition will be publishing sometime in the early part of this year. When it's available, you'll be able to find it at casitacoalition.org. Now, as you think about your income and your home equity, this table right here might help you think through a little bit about what option might be a good fit for you. It's good to look at multiple options. It's good to talk to multiple lenders because comparison shopping can really be your friend here. So that's some of the basic information about the pros and cons. And I know that we're looking forward to some more details from people who actually make loans later on in the program. Thank you.
Thank you so much, Caleb. That was fantastic. Such a great concise overview, and I love hearing the pros and cons from you. So huge thank you to you, Caleb. In a minute, we're gonna talk to more folks. I just wanna mention there is a nonprofit in Sonoma County called Homes for Sonoma that is doing ground leases. So if you guys are interested, you can Google that and look into it. With the caveats, of course, about some of those experimental products that Caleb mentioned, but a great organization doing interesting things. And then I also just want to let all of you know, I'm sure you're thinking, can I have access to these slides later? This synopsis is really helpful. The answer is yes. Again, this webinar is going to be recorded and available on our website next week. And along with the recording is going to be a link to all of these slides that you've seen. So this really handy slide here that Kayla brought up, for example, will be available to you in the future. All right, without further ado, we are going to dive into hearing from 4 more panelists, local folks who can actually help you finance your ADU. And we are so excited to have them with us. And each of them is actually going to do a little bit of a deeper dive to add a few additional nuances and a little bit more info on each of those primary financial products that Caleb went over. So as Caleb was going through, if you were thinking, wait, I want to hear more about these products, never fear, they're about to give you a little bit more info on each one. So with that, I'd love to introduce you to Lindsay Moon. Lindsay is with Searchlight Lending. She's a licensed broker and builder. We're going to be pasting her bio into the chat here in a moment. And with that, Lindsay, thank you so much again. I'm going to disappear and let you take it away.
Thank you, Renee. Thank you. And thank you, Caleb, for your presentation. And hello, everyone. Thanks for being here and thank you for the opportunity. I'm Lindsay Moon, a licensed mortgage broker and with Searchlight Lending. And kind of as my side hustle, I'm also a prefab builder and a big advocate for ADUs as well. And I'm really excited to be here. Tonight, I've been asked to speak with you about first mortgage refinancing as a means to build your home build your ADU. And it's one of the easiest and cheapest ways to obtain the equity needed. But of course, the equity needs to be there. And despite historically low interest rates, the lenders are being quite cautious and careful. Qualifications are high and lenders are being quite stringent about their qualifications. So rates for pulling out money, cash out refinancing, is not much higher than what's called a rate and term refinance, which would be just refinancing your current mortgage, your current loan amount, just to a lower rate, not actually pulling any cash out from your equity. With low rates, it is a good time to be able to take advantage of using this equity. But I would potentially anticipate or at least discuss with a broker potentially having to refinance after the construction is complete. Not only it will be based upon a higher appraised value now that you have your ADU, but if you may also be able to get a lower interest rate because doing another rate and term refinance is just that much cheaper. If you don't have equity in your existing home, but you do own a home that does have equity, we do also have loans that where you can cross-collateralize that. So certainly happy to discuss your specific scenario if you want to reach out. Next slide, please. Thank you. So there are quite a few different loan options out there. We've got the, conventional residential loan product, but we've got a lot of unique options as well. And for those that it might be in a unique financial situation, like being self-employed, and this is where an independent mortgage broker is truly key. We work with many different lenders. We're uh, able to offer a lot of out-of-the-box solutions because we are truly shopping for you, the borrower, amongst several different lenders. We receive wholesale pricing from lenders, and oftentimes we can beat a lot of retail banks. And so aside from the conventional side, we have this kind of gamut of different loan products that are out there for those, again, that may have a unique financial situation. Bank statement loans for those are self-employed, ITIN loans, which are for non-citizens, no-doc loans. We actually have loans that are based on your qualifications of your reserves and your credit score, and you actually don't need to be employed at the moment. So if you're strong, but you're in between jobs, there are options out there for you. A DSCR loan, which is for rental properties, the income generated by the rental of the unit. If it covers the mortgage, there are loans for rental properties, loans for DACA borrowers, and loans for the full gamut of both manufactured homes and modular homes. So don't hesitate if you're feeling stuck. It certainly doesn't hurt to reach out to a mortgage broker to discuss, what your options are. And a good mortgage broker, even if you're not maybe financially ready to make a move right now, a mortgage broker can certainly point you in the right direction of where you need to be as well. And with that, I'll pass on the torch.
Wonderful. Thank you so much, Lindsay. That was fantastic. I really appreciate, in particular, the fact that Searchlight Lending has these options for less traditional folks and less traditional situations for folks looking to finance their ADU. And I just chatted to everyone a link to our vendor registry on our website where you can easily access contact information both for Lindsay and the other panelists that are joining us this evening. So with that, I want to introduce you to our next panelist. And Lindsay, you can mute and turn off your video, and Nick, join us. So wonderful to introduce Nick, who is joining us from Redwood Credit Union up in Sonoma County this evening. He's the external real estate sales manager for mortgage lending at RCU. And he is going to do a little deep dive into a couple different financing options for all of you and share with you a little bit about RCU as well. So with that, I'll hand it over to you, Nick.
Awesome, thank you. And again, thank you for putting this together for everybody, and happy to be here. So I am Nick Clay. I am the external real estate sales manager at Redwood Credit Union. That fancy long title basically just means I'm one of the mortgage managers at RCU that helps with our loan officers that are out in the field, everywhere from San Francisco up to the North Coast and everywhere in between. So I've been with Redwood 15 years. If you have any questions about basically anything, RCU, you can always shoot me an email and I'll be happy to help you out or get you to the right spot. So today, though, we are diving in. Next slide, please. We are going to go into some little deeper with second mortgages and HELOCs, home equity lines of credit. So kind of just a quick recap. Fixed seconds, fixed rate loan, fixed term, fixed payment amount, everything. Like we stated earlier, fantastic option if you know exactly how much money you need. You know exactly what kind of a type of payment you're looking for. You don't want any, you want the full stability of it, nothing to change. Fantastic option. A lot of the times, like you guys probably know out there listening, costs can tend to creep up in certain areas and things can change. So there's, but if you do know exactly how much, good option, fixed seconds. So again, we have 5, 10, and 15-year terms at Redwood. Rates on those are pretty competitive. You tend to see them in the fives, somewhere around there. Every lender is a little different that does them. The other option is a home equity line of credit. So open-ended line of credit. Both of these are leveraged against the equity in your home. And a couple of the specifics on the HELOCs. So the home equity lines, they have an open draw period. Like we referred to earlier, it's almost kind of like a tapping into a credit card. The funds are there. The great thing about a HELOC is it is available to you. Use it, don't use it. And you basically are only going to be paying on what you borrow and when you borrow it. When you're doing a project like maybe an ADU or you're doing a fence or something, things come up, but you might not need it all right away. And you may even have plans to pay it back pretty aggressively. So the great thing with the home equity lines is you can take a draw, you can pay down a chunk, it frees back up, so on and so forth. The home equity lines do have variable rates on them. There are some products out there that might have some kind of a fixed component, but generally they are variable products. So the payment can flex if rates increase with the market. Something to keep in mind. So whatever situation's best for you, you'll know that. Kind of a funny question we get asked a lot, but it's a really good question. You get a HELOC and you're like, how do I actually get the money? A lot of lenders will give you HELOC checks, so you can write a check, draw it right off of the home equity line. Or if you bank wherever it is, like at RCU, which you should do, you can just log right in and transfer it at will. So you can just drop it into your checking account. You can put it back against the loan, whatever you want to do. So pretty easy access. The fixed seconds, like we said, one lump sum, tell title where you want it, wire, check, whatever, and then the funds are yours and you start paying on it right away. So a couple of specifics with our HELOCs. At Redwood specifically, we have no closing cost options for up to $200,000. There are a couple boxes you do need to check along the way, but doing these for a decade and a half, a lot of people qualify for the no closing cost option. So depends on a couple of value, credit score, some of those things, but majority of the time it's doable. The other thing is we do loans, these seconds, up to $500,000. This is Redwood lending policy. We'll do it up to 500 grand. I will say this though, just like Lindsay said, if you're starting to get into that kind of cash, really look at that first mortgage again. We have brokers and lenders like Redwood and Umpqua and Loan Depot and all these outfits. We have options out there, and the rates are very, very, very good right now. You want to do a second up to 500? Okay, but really consider that if you're going to go that big. But we do them. Another thing we do at Redwood is we have you can take a second against a primary owner-occupied home, your main residence, a second or vacation home, and also an investment property or rental property. And this isn't normal everywhere with lenders, but we do offer those options. There are loan to value ratio restrictions as you kind of get further down that list, but we do them. And we've had multiple members that are thrilled to have them and utilize them. The other thing is we do up to 85% loan to value on our second products. The closing costs tend to be a little bit more, pricing can be a little different, but if you need that extra 5%, it's there for you in case you need it. The two types of home equity lines, and you tend to see this at a lot of lenders, is an interest only and then a standard principal and interest home equity line. At Redwood, the rate's the same no matter which one you choose. So it's really kind of just your preference. But the interest only is open for a 10-year period. And then it has a 15-year repay if you haven't already paid it off. The standard principal and interest home equity line has a 15-year draw period. So it's open for 15 years for you to access back and forth, pay it off, use it, pay it off, whatever you want. And then it also has a 15-year repay. The kicker on this is that interest rate required payment is less. It's about half of what the P&I payment is. Does that mean you don't make principal payments? Go for it. I've had an interest only HELOC myself, use it, pay it chunks at a time, use it. That's what it's there for. But really, whatever your situation is, whatever's best for you and your project. We also offer the home equity lines in first and second position. So if you don't have a mortgage on your home, congratulations in general. But if you wanted to have a home equity line and you didn't want a fixed product, you just wanted a HELOC there, you could do that. So that's really a great benefit there. And then kind of in closing, just wrapping up, there is one other product that we are coming out with. It is not live yet, but it should be live here in the next, I'm hoping this quarter. And it is a ADU loan program, specifically from Redwood Credit Union. We have local underwriting decision-making out of Napa and Sonoma County. That's where Redwood's based out of. And with member feedback, it led to this product. So it's not out yet, but just kind of a couple high-level items. I saw someone ask a question in the Q&A already that asked about rental income towards qualification. So this product is going to be, this is the parameters, I'll just tell you, it's going to be a 20-year loan term. It's a second product, second position, up to $300,000, fixed rate, probably in the mid-4s, depending on your situation there. And the first year is an interest-only payment requirement for the construction period. That's exactly what it's designed for, is for an ADU build. And then after that, it's fixed for 19 years on the payback. we're going to allow up to financing to 90%. And we are going to allow for 80% of rental income and including forward rents. So really helping you get that full financial picture. What's it supposed to look like? Does it make sense? Can we do it? And then we'll take a look at doing that for you. But those are some of your second products. Feel free to come visit us at RCU. We're happy to help. We're here for our communities and for you guys. And thank you so much.
Amazing. Thank you so much, Nick. That was fantastic. And we are so excited about that new ADU product at Redwood Credit Union. With that, I want to introduce you to our next speaker. So Tim is going to be joining us here. Tim, if you want to bring up your video and unmute yourself. Tim Olson is a home loan officer at Umpqua Bank Home Lending, and he's based out of Napa. He has a lot of experience working with folks on ADUs and home lending, of course. And I'm just going to go ahead and let you take it away, Tim, and you guys can all see Tim's bio pasted there in the chat. Thanks so much for joining us, Tim.
Thanks, Renee. Hello, everybody. I'm going to talk about the construction and the renovation side of financing for ADUs. We at Umpqua were founded in Oregon on the Southern Umpqua River, which is a timber mining town back in the 1950s. And so our roots as a bank are founded in construction financing. And that is one of the primary reasons why I came on board a couple of years ago, was that Umpqua has one of the best construction and renovation programs in the business. Beyond just the financing part, of course, there's a lot of moving parts when you're talking about building a place, and you've got home builders and contractors to deal with. You've got the time frame. Most of the programs, whether it's a construction or a renovation program, will have a limited amount of time, generally between 6 and 12 months for the construction period. So, for example, when you're building from ground up, and I have a number of customers that are building a house and an ADU at the same time, you have a clock ticking on you. And as you are getting your project started, let's say in the spring, depending upon your timing, you know, right now we are just starting to hit the wet weather here at the end of January. Normally, whatever normally means anymore, weather-wise, we've in the past seen weather come up in late October, early November, which can put a kibosh on the construction. And it's something just to bear in mind is beyond your budgets and everything else that goes along with it is the time frame that you're going to run into, because once the loan closes and you're under construction, you have a clock to deal with. And if you have to set aside, say, 2-3 months to get through the wet weather, it'll have an impact on when you get the loan closed and when you get the project finished. That said, construction financing is generally a lot more cumbersome than a straight renovation loan. And both of these are going to be more cumbersome than what Lindsay and Nick discussed, which is pulling equity out of your home, whether it be through a cash out refinance or a second mortgage or a home equity line. The other thing to consider with construction and renovation financing is that you will need to use a licensed contractor, and they also will be underwritten and approved by our construction team to make sure that they have the experience and the capability to deliver what they say they're going to do. It's a vetting process that we go through that protects both the bank as well as you. I've got a number of clients though that want to build their own. They have family or friends that are in the trades, and they might want to try and save some money by kind of playing their own contractor, which is fine. But construction and renovation financing will not allow for that, whereas a home equity line or pulling a cash out refinance and pulling some equity out of your home, once the money's in your pocket or in your bank account, you can do what you want with it. And that means if you have the skills to build your own place or have family or friends that can help you with that, then that is a way to go. Whereas with construction and renovation, we're going to want to really, when we put a loan together, we're going to basically approve the loan in 3 areas. We're going to approve you on a credit basis, your income, your assets, your credit ratings. We're going to approve the builder, make sure that they've been in business long enough that they've got the financials and the referrals and all of that to build the project on time. And then we also underwrite the project itself. One of the key things that we're finding, we have a lending footprint in the 6 Western states, and certain pockets geographically, we're finding that you cannot get the places, whether it's the home or the ADU, to appraise out for what it costs you to build it. and lenders will loan against the lower of the two values. So we're going to look at what the cost is, and we're going to look at what the finished value would be and have an appraisal done. And whichever of those two is lower is what we're loan against. So oftentimes we're finding in some areas, it's real easy to overbuild. Case in point in Napa, if you go into the neighborhood that is just north of where Target and Home Depot and Trader Joe's is, it's called the Bel Air neighborhood. That's a $600,000 to $700,000 neighborhood. If you go in with a $300,000 or $400,000 ADU, you're never going to get the value back out of it because you're going to be overbuilt for the neighborhood. Whereas you put that same ADU, say, out on the outskirts of Napa, out into the county area, so to speak, where the values can range quite a bit more, than the ability to get a higher value out of your construction project is much more feasible. That said, once if the construction loan is not the way to go, and for a lot of ADUs it won't be, it's a really involved process. The renovation financing is an easier and oftentimes more seamless way to go. Fannie Mae, who I'm sure most of you have heard of, has a program called Home Ready, and FHA, or the Federal Housing Administration, has, as previously mentioned, a renovation loan called the 203K. And both of them have their advantages and disadvantages. I don't want to get into too many details, but in general, with FHA financing, you're going to have a 6-month window for your construction. So the day that you close escrow, you've got 180 days. And if you've done your homework, that should be more than enough time to put up an ADU. Whereas with the Fannie Mae Home Ready, you have a 9-month window, and so you do have a little bit more time. But in either case, if you go past your time frame, it can get really dicey. There can be penalties and extra costs involved because, again, they have some pretty strict rules around how long the money is going to be employed and how long you can get the project finished before it's all done. I think the only other thing I really want to touch on is the idea that once you get your place into construction, if you run short of funds, you will not be able to get financing to cover that. The mechanics lien laws are such that banks and most mortgage companies, again, Lindsay may have some sources because she brokers to some creative out of the box lenders, but from a traditional bank lending point of view, we will not lend on a project that has already been under construction. So the budgeting and the flexibility are really a key thing. And as Nick touched on, if you get a fixed loan amount, then that's all the money you're going to get. Whereas if you go with the home equity line, you can have the home equity line for more than you're going to need. Let's say you anticipate a budget of $250,000. You put on the home equity line for 300 or 350. You're only going to pay for the outstanding balance as you draw the money, but you've kind of given yourself what I call the wiggle room or the buffer, so that if some costs overrun, you still got the financing available. I get calls occasionally from people and they say, we're midway through construction and we're $150,000 or $200,000 short of what we need. Can you help us out? And the only thing I can do, I can't do a loan for them. At that point, we can get creative about how we might be able to generate some cash, either pull it from another piece of property or borrow it from a family member short term. There's private money available, which will cost you a little bit more than traditional financing, but there are ways to do it. I just want to urge you to be very, very careful about budgeting. It's real easy if you've never done construction to get into the middle of a project and get rather excited about it. And then let's upgrade the kitchen, appliances, or let's do a nicer French door setup or whatever. There's going to be some things that you really need to have in your project, and there's going to be some things that you'd like to have. Focus on the things that you need to have. Those are the things that have got to get done. And if you've got excess budget beyond that, and you want to put in a little nicer bathroom or kitchen or some other features, and you've got some room left, then that's fine. But the key thing is to learn to live within a budget when you build these things for, again, not just the financing purposes, but resale value. And also from an investment point of view, if, as Renee said earlier in the webinar, where a lot of people are looking at this as a rental or an income stream, you want to be cognizant of your investment to return, your ROI. And if you can put a ADU together, let's say for 250,000 instead of 300,000, and it will generate $2,000 a month in rent, well, then your return on the 250 is going to be much better than it is if it's a return on 300,000. So as exciting as it is to have an ADU and all the other things that come with it, be cognizant that, again, part of it at least is from an investment point of view, you're adding to the value of your home, you're going to be creating an income stream. You want to make sure that the two of them make sense. That's about all I had to say for now. I'm going to wrap it up and send it back over to Renee.
Wonderful. Thank you so much, Tim. I can't tell you how much we appreciate you joining us. I really appreciate kind of your thoughtful advice about budget and being realistic upfront about costs. It's a conversation we have a lot with homeowners, and that ADU calculator tool that Caleb talked to you all about earlier that's on our website is really helpful because it has information about realistic costs for Napa and Sonoma counties for building ADUs right now, with a lot of different factors that you can plug in there, including, the site characteristics and the number of square feet, stuff like that. So really great advice. So glad that you all are here with us this evening to be talking about this. And the sooner in your thinking process that you're thinking about budget and financing, the better. So thank you again, Tim, for that. And with that, I want to introduce you to our final panelist, Gary Lentz, who is a loan consultant with Loan Depot based out of Santa Rosa. And Gary is going to share with you just a little bit about himself and about what Loan Depot has to offer. So with that, I'll turn it over to you, Gary. Thank you.
Hi there, everybody. Great to be with you. What an exciting topic. We're so lucky, my colleagues and I, to get to be in a business where, the outcome of what we do is people usually buying a house, in other cases, saving money by refinancing and getting a lower rate. But ADUs and getting income from your property is kind of near and dear to my heart. I actually own an Airbnb. I call it an Airbnb. It's a property that I rent using the casual renting network. And I'm actually buying another one right now that has an additional dwelling unit attached to it. And the idea is to live in one and then use the other one when that place is rented out. So this is definitely a topic that I really enjoy. I think my colleagues did a great job of getting into all the different facets of what you need to be thinking about. I do think with today's low interest rates, it's a great time to be thinking about, if you've got equity in your home, to go do that first mortgage cash out refinance. I think that's probably a great strategy. I would say that I do believe, though, in people doing what they're great at. I refer construction lending clients over to Umpqua Bank all the time. They're the best at that. And if I was going to do a HELOC, I would definitely go to RCU. My two loves in life are that cash out refi or the 203K. And I wanted to talk just briefly about that before I sign off here and get to your Q&A. Definitely with the low interest rates right now, I like the idea of taking money out if you've got the equity, taking it out and just fixing that interest rate, because interest rates are just unbelievably low right now. And so not having that variable rate of a HELOC, I think, is probably preferable now. But everybody, there is some of the drawbacks and the things that Nick talked about. Being able to draw down on that loan is sometimes a nice thing if you're not sure what your budget is. But the 203K is a really powerful tool through the FHA. And it does require you to have your budget, to have your building plans definitely in place before you get one of those loans in place. But I think they really afford a way for somebody who doesn't have much equity in their house to. The magic of those is that we get an appraiser to come out and look at your property with the improvements you're going to put into the property, and they value it based on that new value. And that's really very neat, I think, because then you get your loan based on the future value of your property. But again, as others mentioned, you do have to have those plans in place. So it takes a serious effort on your part. Loan Depot is the 5th largest lender in the country. We have a lot a lot to offer our clients. We do a lifetime guarantee. Once you finance with us, all your refinances are free, which is unique in the market. So I'd love to chat with you about what you've got planned and maybe strategize with you a little bit just on the practical nature of having an ADU and earning rental income from your home. So with that, I'll turn it back over, and thanks very much for having me.
Wonderful. Thank you so much, Gary, for that. It's so great to have all of you local folks who can share your knowledge and information. And as I mentioned to all of you and chatted into the chat, we have our vendor registry available on our website that has a bunch of different housing professionals on it. We're constantly building it up, really doing a big push on increasing the volume of folks available to all of you on that registry, and all of our panelists this evening are available there. So if you missed their contact information, you can just go to that vendor registry on our website and access that. I also just pasted once again a link to our ADU calculator tool for all of you, also available on our website. So highly recommend that you check that out. Make sure that you look at both the inputs, so you can input your city, or if you're in unincorporated county, you can input the number of square feet you want your ADU to be, the type of ADU, which we're going to talk about here in a second. You get to input the number of bathrooms, the number of bedrooms, and then you also get to input information about what you're thinking your financing is going to be. And then it gives you a bunch of different outputs. So on the initial tab, it walks you through what type of monthly rent you'd likely get in that city or county for that size ADU, as well as what your return on investment would be over time. So there's a lot of helpful information. Take your time with that tool. Don't be intimidated by it. It's actually quite user-friendly, and we highly recommend that you check that out. With that, let's talk a little bit about what types of ADUs you all are interested in before we dive into our Q&A. And as you think of questions, please feel free to type them into the Q&A chat. But take a moment right now and complete our poll. Tell us, what type of ADU are you interested in building? Is it a detached backyard cottage, an attached unit that shares at least one wall with the primary home? I myself live in an attached above garage ADU. So above garage is available there. A lot of folks are interested in converting their garages into a garage apartment these days. There's also the significantly more cost-effective option of an interior conversion of existing space in your home, like an attic or a basement, or a junior accessory dwelling unit, which is a conversion of existing interior space or an attached garage that's no more than 500 square feet. We have more details about these types of ADUs available on our website and in that ADU workbook that we shared with you in the chat earlier, which is also on our website. So I'll give you guys a couple more seconds. Feel free to select what type of ADU you think you're interested in building, if you know. And we love getting to hear from all of you. So it looks like 68% of you are interested in a detached freestanding structure, such as a backyard cottage. About 30% are interested in a conversion of a garage. About 25% are interested in an above garage. And about 25% are interested in a junior ADU, which I think is so wonderful. A lot of us just have a lot of unused house space in Napa and Sonoma counties. And we need to build tens of thousands of housing units to meet our housing crisis. And so thinking creatively about what's an affordable way that I can be able to age in place thanks to creating a unit from that existing space already. That's a really, really wonderful option. Thank you all so much for sharing. With that, I just want to cover a little bit more information, and then we're going to dive into the Q&A portion. Again, that Q&A chat is available at the bottom of your screen. So now's the time to start chatting in any questions that you may have for all of our panelists to tackle here in just a moment. All right, so understandably, folks have a lot of questions about ADUs and taxes. Very smart for you to be thinking all of this through on the front end. We recently published a really detailed blog post on the subject, but in short, adding an ADU will likely affect your property taxes as well as the resale value of your home. However, your primary house won't be reassessed, and your property taxes will only increase based on the added value of your ADU. So said another way, the existing Prop 13 base year value of your primary residence and your land won't be impacted. This is really good news for folks who have owned their home for many years and have low taxes. And depending on the size and construction quality of your ADU, the county assessor will determine how much more your property would sell for with an ADU. So for example, if you build an ADU that adds $150,000 to your property value and your tax rate is 1.1%, your taxes would increase by 1.1% times 150,000 or $1,650 per year. So other options we just talked about, like creating a junior ADU or doing an interior conversion within the existing structure, will have a significantly smaller impact on the assessed value. And in some cases, your taxes won't increase at all. Again, that also means that it may have less of a resale value increase as well. And then adding an ADU may also impact your income taxes. And this can be a little complicated. So we advise you to discuss this with a tax advisor. We are not tax experts. So definitely take all of this as information to get you started on thinking things through. And also just note that your unit could be assessed in different ways for different purposes. So if you're trying to get a loan, the bank might be more conservative and assume that the value of your home will increase less. Like I mentioned, make sure to check out our blog post because it dives into conversations that we've actually had one-on-one with the Napa and Sonoma County assessors offices on this subject. So the link is here on this slide. And in that post, we provide contact information for the county assessors offices, and we really advise that you guys touch base with them directly. Okay, so with that, we are going to dive into our audience Q&A. Again, now is the chance for you to chat your questions into the Q&A at the chat at the bottom of your screen. And we are gonna all come up. So if I could invite all of our panelists to bring up your video and your audio, and we're gonna go into gallery mode here so everyone can see us. And I'm actually going to kickstart us with a question that we received from a homeowner prior to this evening's webinar in advance. So this question is regarding retired seniors on a fixed income qualifying for financing. So their questions are, can projected income from a rental be considered in qualifying? We talked about that a little bit this evening. And is a down payment required if you have 100% equity, no debt on the main house? I'm wondering if we might start with Nick on this question. Nick, do you have some thoughts on that?
Yeah, that program is going to do exactly that with the rent forward income qualification, but that isn't live. It not being live yet, I don't want to speak further into it until it's rolled completely out. But yeah, that is the goal. I think we can have Lindsay and Gary also, if they have any other feedback on the second portion of that question.
Perfect. Lindsay. The question is, can projected income, is a down payment required if you have 100% equity, no debt on the main house?
A down payment for pulling, I mean, there's not really a down payment when you're refinancing. You're just pulling out equity. I'm not sure if I'm understanding the question correctly. Yeah.
I would say that yeah, if you've got plenty of equity in your house, what you would do is take out, if you think it's going to cost $150,000 to do your project, then you would take out the 150 or maybe a little bit more, as was discussed earlier, so that more than you need. But yeah, there's not really a down payment on doing the work. If you have cash to contribute in addition to what you take out on your loan, you can certainly do that as well. But that's a choice that you get to make.
Absolutely.
Thank you both for that. Okay, next question. So we have a question here. Current conventional conforming home loans are in the low 2%. So question about competitive rates being at 5%. And I think that must have been a reference to something that I'm not recalling. Does anyone want to chime in on this?
I'll take a shot at this.
I think I mentioned it with the second product, so I just want to clarify that was the second product where the number 5 flew out somewhere in there. So, but go ahead, Tim, on the rest of it. But that was a second, right?
And Nick's right. Second mortgages will cost you a little bit more than first mortgages. There's a lot of advertising out there right now around interest rates. Every Sunday morning when I get my Chronicle paper, there's a little Own It sticker on the front page advertising 2.25%. Hopefully everybody understands that there's no such thing as a free lunch in this world, and that what seems too good to be true usually is. I'm looking at the Freddie Mac website right now. Freddie Mac and Fannie Mae are the two primary conventional lenders in this country. And this is as of last Thursday, but the 30-year fixed rate at Freddie Mac was 2.77% at 0.7 points. So that's, we're in the high twos. I locked a borrower today at 2.875 and no points.
2.75, yeah.
These days pricing is highly customized based on your credit score, the loan to value, and a number of other factors. If you're pulling cash out versus not cash out, and so forth. So we can talk in general, and rates are certainly in the 3% and below category. But as far as 30-year fixed at 2.2, 2.3%, no, it's not realistic.
If I may say, it is available, but not as a no cost loan. I can get people down as low as almost like 1.99, but you're going to be paying for that. That's not a no points, no fees loan.
Fair point.
I used to, when I was in college, I took a statistics class, and there was the famous phrase, there are lies, damn lies, and statistics. I think that was Mark Twain. I've updated that to there's lies, damn lies, and mortgage come on. So yeah, somebody offering 2%, get your wallet ready, because they're gonna charge you a whole lot to get 2%.
And one last thing about pricing, I would say is this. If it's strictly a rate and term refinance and you know exactly what you want, then the pricing may be a bit more of a commodity type issue, the lowest price in town. And even then I would caution to be careful. But when you're talking about building an ADU or any kind of construction, when you call a lender, any of us, and I'm sure a lot of our fellow loan officers, you're not just getting somebody that's going to take your loan application and shuffle your pay stubs into the underwriting department and away you go. I grew up in the construction industry. My dad was a contractor. I've built homes. I've been around financing for construction my whole life. I bring with the loan officer title a wealth of knowledge that I can share with people and happily do. And I'm sure all my fellow panelists do the same thing. Oh, hey, I had a customer trying to do something like this and they ran into this snag, and here's what we did, and here's the solution. And so you're getting more than just an interest rate and a loan officer when you are talking about building an ADU. And practically speaking, there's a value in that. So just kind of keep that in mind as well.
Awesome. Thank you all so much for chiming in on that. Okay. Let's see here. There was a question that was asked and answered in chat, but I want to make sure we lift it up. Are there loans that work with a 184 loan for Indigenous people? And Lindsay, I think that you had a reference for folks. Do you want to just share that out loud?
Absolutely. That's a housing and urban development product. And if you go to the HUD website, hud.gov, there is a lender list of those that offer those loans. So that should lead you in the right place.
Awesome. Thank you. And then another question that's been asked and answered in the chat, but I want to lift it up is, in the loan to value scenario, who determines the quote value of the main residence? The appraiser, the market, what's the cost to the homeowner if appraisal is required? And Lindsay, I know you chatted and answered. Do you want to share a little bit verbally with everyone on that?
Yep. It's definitely the appraiser, the appraisal that will determine the price of the home based on comps, and appraisers are all certified. And with that, if you are lucky enough to get an appraisal waiver, if you are refinancing, then really you're kind of looking at comps in your neighborhood. You look at Zillow, you look at kind of what you think your home is roughly valued at.
Thanks so much for that, Lindsay.
I would say that I spoke about the magic appraisal, which I think is so interesting, because usually you're looking at a home as it stands. The 203K, the beauty of that is they look forward, they look at your detailed plans from your contractor, and they say, okay, you've got your home and what it's worth now. Once this addition is done, what's it going to be worth? And then they lend to you based on that. So I think those appraisers are employing some kind of witchcraft to do what they do, but I do think it's a neat tool for that reason.
Thanks so much for chiming in on that, Gary. We have a question here that I can answer, which is, can you speak a little bit to the Junior Unit Initiative program that's offered by the city of Napa? So I'm so glad that this came up in the questions. So as of now, across the 16 jurisdictions in Napa and Sonoma counties, the city of Napa and also, I believe still the county of Napa have some ADU financing grants that they provide. And I am not a staff member at the city of Napa, and so I can't get into the details of the programs. We actually have in past webinars, if you go to our website, invited the planning department from the city of Napa to come on a webinar that's recorded and available where they talked through the Junior Unit Initiative program, and that's how to build an ADU in the city of Napa. So you can get some information there. And then also if you just Google Junior Unit Initiative ADU program, like City of Napa, they have a great guide that walks you very clearly through the terms and conditions. But essentially the idea is they provide folks with financing for an interior conversion or a junior ADU unit. And in exchange, you're renting that unit at a little bit lower rent for folks to be able to have a unit that they can afford more easily in the city of Napa. It's really great program. Highly recommend that folks who are interested go check it out. And thank you to Caroline for asking that wonderful question. Okay, more questions that we have here. Let's see here. We have a question I'm also going to answer, sorry. How do you estimate your permitting costs? That's a great question. So it's going to totally depend on the city that you're in or unincorporated county, so the jurisdiction. So every single jurisdiction has different permitting costs. Thanks to the new state laws that came down a year ago in January 2020, there are no impact fees assessed on ADUs that are under 750 square feet. But in order to get that specific information on permitting costs, you're going to want to go to your jurisdiction or come to me. You can contact me through our Contact Us. Tell me what jurisdiction you're in, and I can help you get that information about sample permit fees depending on the size of your ADU and depending on your jurisdiction. So that's a great question. I'm glad people are thinking about that. And I'll also add that pretty soon here, we're going to be factoring that into our ADU calculator tool that I mentioned as well. We're working right now on getting some algorithms together that make sense across the 16 jurisdictions to have some of those government fees, depending on what city or unincorporated county you're in Napa and Sonoma County, in that calculator tool as well. Wonderful question. Okay, we have more questions coming in. Let's see here. Can panelists speak to what information, plans, budgets, etc., they would want in order to discuss a project's feasibility? I'm assuming that's feasibility for financing. Does anyone want to chime in on that?
Sure.
Thanks.
Part of it will depend upon the loan program that you're going to go towards. If it's a straight construction loan, then you're talking about, at some level, architectural drawings. But when you're talking about renovation loans, you don't need to be quite as detailed. You're going to, at a minimum, you're going to want a cost budget. And we're going to build in a contingency factor, for example. We usually work with 5 to 10% for cost overruns during the course of construction, and particular materials out there can change. Case in point, last summer, when the fires roared through, the price of lumber went up 20% in 30 days. And if you were in the middle of building and all of a sudden your lumber budget just went up by 20%, that could eat up a good chunk of the money that you've already budgeted out. So depending upon the loan program and how you're going to finance it, there is going to be more or less restrictions. If you're going to do it with a HELOC or a cash out refi and have your brother-in-law act as the general contractor, it's a lot less formal. But either way, I would recommend that before you even come to see us, you spend a little time doing some homework and getting a sense of, use the calculators and the tools that Renee has been referring to, and do a little homework so that you at least can start to put your brackets around things, because it's real easy to get your budget out of control pretty quickly.
Also,
Great.
some lenders do require you to use, certain contractors for your project. You have to make sure that they fit certain qualifications and parameters. So if you're doing a construction loan, you really are beholden. You're kind of stuck in the middle with the lender on one side, releasing based on milestones, and your contractor wanting to get paid on a regular basis so they can pay their people. And it can be a stressful situation. So ideally, if you can take the money out of the existing equity using a HELOC refinancing or whatever, then it's at your discretion and you're more in control in that term. But you have less people helping you to mind the store too. Construction can also, a loan can be helpful with your lender helping you to keep things in check. So there's kind of pros and cons to both. Oh, I should mention that you certainly don't, if you're just doing like a cash out refi or HELOC, we don't care what you're doing. Which again is for an ADU, because not all lenders will lend on building an ADU. That is a nice way to go if you have the equity there already.
One other thing I would like to mention about budgets, because I don't think it's come up yet, but the rules around financing for ADUs is very fluid these days. Before a year ago, Fannie Mae did not like a manufactured home as an ADU on a property that had a stick-built main residence. So they now allow for that. So another thought beyond the actual construction of something is to think in terms of modular or factory built, or possibly even buying a nice manufactured home and just having it, a foundation poured on your property. And that can cut down on an awful lot of this planning. So there are a lot of flexibilities out there in terms of putting an ADU together. And more the lenders are evolving their guidelines for what they will and will not allow to be lent upon.
That's a great point, Tim. I mentioned to you the other day, Renee, that I had a contact and I haven't gotten her information yet, but there's a company out there that specializes specifically in ADUs and building modular and placing it on your property. I'm going to try to get that information. I wish I'd gotten it before tonight, but I'll get that. If somebody wants to reach out to me, I will endeavor to get her contact, because that's a great point, Tim.
Thank you so much, Tim and Garrett. I totally agree. And that vendor registry that I shared has some prefab companies on it, including a modular options and manufactured options. And we have a ton of information in our ADU workbook. And if you watch some of our recorded webinars, our ADUs 101 webinar and our building ADUs in Napa and Sonoma counties webinars, we talk a lot about different prefab options. We talk a lot about whether realistically certain prefab options are a significant savings or not. It really depends. I agree with you, Tim, that there are some manufactured options that are definitely going to offer significant cost savings. And it all depends on exactly what you're looking for, why you're building the unit, and a lot of other contingencies. But there's great options out there. For prefab, like modular units, we're actually not seeing a huge cost savings in terms of budget on the front end. But thanks to the labor shortage due to wildfires, especially in Napa and Sonoma counties, and the length of time that a stick build project can take, you can usually get a prefab unit up and running significantly more quickly than a stick build, which means that if you're renting it out for rental income, you're going to see a return on your investment a lot sooner. It could be a lot sooner. So that can be significant in terms of overall financing. So I'm so glad you all brought that up, and I recommend you all check out that additional information that we have on prefab. Okay, more questions. Another one that was asked and answered by Lindsay that I'd love for you to just share verbally with folks. What does no closing cost mean, Lindsay? Can you share a little bit about that?
Absolutely. Whether you are purchasing or refinancing, there are a lot of people that are involved in that process, and there's title fees and transfer fees and such. A good general rule is about if you're refinancing, refinancing should cost about $3,500 to $3,900 roughly in there. And sometimes your pricing, when it's generated by your broker, will have a bit of a credit in there at that rate to cover those costs. And so you when it all is said and done on your sheet at the end, when you're signing, you are not having to come to the table, so to speak, with anything out of pocket. Or there's certainly other ways to maneuver your loan around so that you don't have anything out of pocket. But closing costs for refinancing generally should be budgeted $3,500 to $3,900, and a purchase is substantially more. I'd say usually around 10.
Wonderful. Thank you so much for that, Lindsay. Another question that's come in, are there any financing options for remodeling an existing ADU that may or may not be permitted? So I think it would be like maybe answer to the question of whether or not if it was unpermitted, for example. Does that make a difference for folks?
If it's not permitted, then you'd want to do something where you're pulling equity out and you're just kind of maybe well, gosh, I don't know. It really is going to depend. Tim, you're laughing. Yeah, I'm also a former builder, and I don't know if you really want to get into that can of worms, really. If it's unpermitted, you really shouldn't be renting it out. Yeah. So it really
But you're
comes
also
down.
hurting yourself on the future value of your home because you're not going to be able to count that when you go to sell it. It's not legal space. So there's, if you're trying to add value to your home, it's that you're defeating the purpose there.
Yeah, and my take on that would be that in the real world, things get built without permits. Depending upon the city and the county of jurisdiction, sometimes the regulations and the requirements can be quite onerous, bordering on ridiculous. So if you are in a position where you're going to build something without a permit, build it to code. Make sure that you at least meet the local code so that there is a process when, for example, you could go out and buy a resale house and it could have had a room addition or something else done to it that normally would require a permit that was not done with a permit. You can get that ratified, so to speak, after the fact if the project was built according to the code. And then there might be a small fee or a penalty, but at least they're not going to make you tear it down and redo it all over again. So if you ever get to the point, and none of us would ever endorse or suggest that anybody does this, but in the real world, it happens. So if you are going to do something without a permit, at least do it the right way and build it to the code so that if down the road it gets found out, you won't have to tear it apart. You just get it ratified.
Thank you for that. Thank you for that. And follow up to that, what if you wanted financing to bring an unpermitted ADU up to code?
Yeah, again, it kind of depends, but ideally, if you have the equity, do a HELOC or refi, and but you're going to need to work with, depending on how far off code you are, you're going to need to work with, an architect, a builder, someone that can help you, advise you as to what you need to do to bring it up to code, for sure.
Great. Thank you for that. Okay. I see Caleb is typing an answer to a final question there. Caleb, do you want to share a verbal answer to that one?
Sure.
And
Someone,
share what the question is.
yes, someone had asked, I think one of the panelists made a comment about ADU projects being $150,000, $200,000 over budget. I was just going to say that in my experience, the cost overrun of that magnitude would be quite unusual. There are some people who are out there who think that you can build a detached ADU for $50,000, and that's not really very viable right now. So if you thought that was going to be the price you're going to pay up front, then you are going to get a nasty surprise. Fortunately, with the use of the ADU calculator and by having a good set of plans up front, then you can have more certainty about your ADU project cost and have a realistic cost up front. And using the resources that are available through the Napa Sonoma ADU Center can be helpful in really understanding your options and what might be a realistic way to proceed.
Wonderful. Super helpful. Thank you so much, Caleb. With that, you guys, I'm going to turn us back to our slides. Thank you so much for all of your fabulous questions. We have a couple more slides with some information we want to share with everyone. And panelists, if there's any additional questions that come in that you want to type an answer to, please feel free to do that while I'm sharing here. So we just shared in the comments how you can easily register for our other upcoming ADU webinars. February 11th, how to build an ADU in Sebastopol in partnership with the City of Sebastopol Planning and Building Divisions are going to be joining us. We'd love to see you there. March 4th, we have the first of the two-part series, How to Build an ADU in Healdsburg. The one on March 4th is in partnership with the City of Healdsburg Planning and Building Divisions. And then part 2 on March 18th, How to Build an ADU in Healdsburg, focused on hearing from some local housing professionals, local homeowners who have successfully built ADUs in Healdsburg, and that is in partnership with the local nonprofit Healdsburg 2040. So please check that out and check out our past recorded webinars where we get into a lot of questions that have come out that aren't related to financing as much, but all about the ADU journey, cost drivers for ADUs, our top tips for building ADUs, all tailored to folks in Napa and Sonoma counties. We are here to help you no matter what your reasons are for wanting to build an ADU. And we are so excited to get to continue providing these services to homeowners in Napa and Sonoma counties. So please stay in touch with us. You can reach us really easily via the Contact Us button on our website, or just give me a call at the phone number you see there. And before we wrap up, I also just want to say a really huge thank you once again to all of our wonderful panelists that have joined us today. Again, you can get all their contact information from the recording of this webinar that will be available on our website next week, along with the slides, like I mentioned. Also our vendor registry, which has architects, designers, prefab companies, and now these wonderful panelists up there for you to contact and reach out to individually. And a special thank you for support for our nonprofit organization from Napa Valley Community Foundation Sonoma County, also the cities of Calistoga and Napa and the county of Napa and others. And then finally, a huge thank you to all of you for joining us this evening. It was wonderful to connect with all of you. If you have follow-up questions, again, please don't hesitate to reach out. And we're about to pull up an anonymous survey that will pop up on your screen to give us feedback about this webinar. We always are working to improve our educational materials for homeowners, so please fill that survey out. And again, you can get the recording of this webinar and the slides on our website next week. Thank you so much to all of you. Again, thank you to all of our wonderful panelists, to Amity and Gabrielle, and have a wonderful evening, everyone.